There are a few celebrity portfolio managers, such as Warren Buffett, in the world of investing. Nobody, however, compares to Cathie Wood. Wood is always on the hunt for new enterprises that will help define the future, even if many of them aren't successful. Wood's investments paid out handsomely in 2020. COVID-19 was on the rise, the economy was in free fall. Her ARK Innovation Fund, on the other side, returned a stunning 150%. Wood became the toast of Wall Street as a result of this. Watch the video till the end to learn more about Cathie Wood's clever work. Also, like the video, share it, and subscribe to our channel. Hit the bell icon for more such updates on the market, stocks, and crypto. According to a Friday webcast for investors, longtime Tesla bull Cathie Wood isn't buying into the current surge of conventional automakers like Ford and GM. Musk's automaker is now valued at 5 times what Ford and GM are worth, and Wood has made a fortune. She feels that the nitpicking doubters have missed the larger picture. As electric cars become more common, production efficiency and breakthroughs in batteries and other technologies will reduce the cost of production. Demand will increase as sticker prices fall, notably from enterprises such as ride-sharing companies. Musk predicted a $25,000 automobile in 3 years in September. Ford and General Motors are up 18% and 6% respectively, considerably outperforming Tesla's 3% decline. This is in line with 2021 trends, with Ford up 137% versus Tesla's 50% increase last year. Last week, Ford revealed plans to double the manufacturing of its electrified F-150 to 150,000 cars by 2023, bringing the stock to its most extraordinary level in 20 years. The stock price of General Motors rose when the company introduced an electrified version of its best-selling pickup truck, the Silverado. Think about it. They surged on those electric vehicle announcements, Wood said, noting that electric vehicle sales account for only around 2% of traditional automaker sales, with the remainder being driven by gas-powered vehicles. What if the remaining 98% or so is on its way out as consumer choice turns toward electric, Wood inquired. Wood cited a dip in consumer sentiment, rising used car inventories, and increased semiconductor supply as evidence that the recent drop in new vehicle sales and lack of recovery isn't related to supply chain concerns, but rather customer demand, which is a significant issue for conventional automakers. They have issues since their gross margins range from 10% to 20% depending on the company. They don't have much leeway after all, Wood elaborated. What if we're wrong and there isn't a 20% rise in sales? If we're right on the used car market, they'll have to start slashing prices, which means they'll have to deal with credit concerns since they're so heavily reliant on the loan that people take out on their cars. According to Wood, there's a lot of complacency in that industry. Wood believes Tesla and electric-forward companies are a better purchase than traditional automakers. A business like Ford or GM could report a surprise loss next year due to greater investment in electric vehicles and lower demand for gas-powered vehicles. Those organizations are going to find it extremely difficult to run in the next 5 to 10 years, Wood told Barron's. We're willing to bet they won't be alive in their current state. They could be working together with someone else, or they could go bankrupt. Other investors, on the other hand, appear to disagree. In the last month, GM stock has risen 11%, while Ford stock has risen 27%, fueled by optimism about the company's capacity to compete with Tesla. That company's stock has increased by 29% in the last month. According to Wood, if Tesla is the first one successful in autonomous in the United States, we're starting to believe that not only will Tesla capture the largest part of the electric vehicle industry, but we believe that it may grab 20 to 25% of the whole auto market in 5 years. There is so much unpredictability about who will win and who will lose, said Eric Gordon of the University of Michigan. Some fairly significant movers of money are on opposing sides. Wood's confidence in going her own way has enabled her to develop ARK into one of the world's fastest-growing and most successful investment firms. Its flagship $8.6 billion ARK Innovation Fund is up a whopping 75% in 2020 and has returned a yearly average of 36% over the past 5 years, roughly thrice the S&P 500. While most top stock pickers keep their work a closely guarded secret, Wood makes ARK's analysis publicly available and uploads real-time trade logs. Instead of recruiting MBAs, she wants to hire young analysts with degrees in molecular biology or computer engineering, believing they will be more likely to detect the next big thing. Even ARK's structure, which stands for Active Research Knowledge, is unique. Wood runs 7 portfolios offered to investors and is meant to capitalize on advancements in robotics, energy storage, DNA sequencing, banking, and blockchain technologies.